Welcome to the #1 crypto news show, where we break down the most important stories of the week in less than 10 minutes. All right, guys, in today's episode, we have 4 big stories to cover. First, the Fed just cut interest rates. One of crypto's biggest players, BitGo, is going public. Tether just announced a brand new US-regulated stablecoin. And lastly, a quick note on the current state of the market. Let's jump right in. 1. The Fed just cut interest rates. For the first time since December 2024, the U.S. Federal Reserve has cut its benchmark interest rate by 25 basis points, bringing it down to 4.25%. Now, this is important because rate cuts usually lower borrowing costs, and historically riskier assets like crypto tend to benefit from cheaper money flowing into the system. On the flip side, rate cuts can also indicate that the economy is slowing down. In this case, the Fed said that their rate decision was made due to slower job gains, weaker economic activity, and persistent inflation risks. In plain English, there are some cracks in the labor market, so they're loosening policy a bit, but inflation is still a concern. This combo is a little unusual. Usually when the Fed cuts rates, it's because the economy is overheating. Cutting rates brings us back to pre-pandemic levels. This has both bulls and bears feeling pretty optimistic. The bears are happy to see the Fed come off the sidelines and start cutting rates, while the bulls are excited for cheaper borrowing costs. In any case, this is something to watch because if the Fed keeps cutting rates while inflation stays high, the market might price in more rate cuts and push up asset values. On the other hand, if inflation starts to cool down and the Fed pivots to tightening again, those rate hikes could hit the brakes on the market's momentum. Regardless, rate cuts typically benefit riskier assets like stocks and crypto. And if the cuts continue, we might see more money flow into the markets. Time will tell. 2. BitGo files for IPO. This past Monday, BitGo, a crypto custody and infrastructure provider, filed for an initial public offering, IPO, which would give the company an enterprise value of $700 million. That's the value of the company, including debt. BitGo says that in the first half of 2025, they pulled in $4.2 billion in revenue. What's really crazy is that the company is holding over $89 billion in client crypto assets. And as of now, they control about 20% of the entire crypto custodial market. The company currently counts finance giants like Fidelity and Goldman Sachs among its investors. And honestly, this IPO is great news for crypto. As the first publicly traded crypto infrastructure company, it'll set a precedent for how these kinds of businesses operate. More transparency equals more trust. And look, it's normal to be suspicious of financial products, especially when they promise super high returns. But companies like BitGo are trying to solve real problems, like where can I securely store my crypto? How can I trade without getting scammed? How can I invest in Web3 without getting hacked? These are big concerns. And as crypto grows, more companies will need to fill these roles. We'll likely see exchanges, lenders, custodians, and trading firms go public. This will help crypto move from the fringes into the mainstream financial system. And I can't say this enough times, the best thing for crypto is more transparency. So thumbs up if you're excited about this. 3. The UK and US are getting closer on crypto regulation. The Treasury Department and the UK's Treasury announced yesterday that they had begun talks to align their approach to digital asset regulation. At the moment, talks are focused on stablecoin regulations, and their release said that both countries intend to legislate to ensure stablecoin arrangements are appropriately authorized and supervised. Now, why is this such a big deal? Well, stablecoins are at the heart of almost everything we do in crypto. We use them to trade, to earn yield, to buy NFTs, and more. Having a clear legal framework for stablecoins will make crypto more accessible for retail investors, and more importantly, it'll level the playing field for businesses. You see, right now there's no federal law governing stablecoins in the U.S., and many stablecoin issuers are incorporated in low-regulation environments like the Cayman Islands. Now, some people like this because it gives them more freedom. Others don't, because it's easy to scam people when there's no oversight. In any case, regulation is inevitable, and this is a sign that governments are starting to work together to create that regulatory environment. We'll keep you updated on this one. Number 4. Tether launches a new regulated stablecoin. Speaking of stablecoins, Tether just announced that it's launching a new dollar-backed stablecoin called usdt that will be issued through Anchorage Digital Bank. Here are the details. Tether will issue the stablecoin through a subsidiary called Tether US Holdings Limited, which will be overseen by Anchorage. Anchorage is one of the first federally regulated digital asset banks in the U.S., and they'll hold the reserves backing usdt. Tether is calling this a general-purpose stablecoin that's designed to be used for everyday transactions. While existing stablecoins like USDT and USDC are often criticized for being over-collateralized or opaque, usdt will be redeemable one-to-one for US dollars and backed by cash and cash equivalents. Now, why is this important? Tether is the world's largest stablecoin issuer with a market cap of over $83 billion. If a company like Tether decides to create a fully regulated stablecoin, it'll force other issuers like Circle and Coinbase to follow suit. Not only that, but it'll also give institutions more options when choosing a stablecoin. Right now, most institutional players prefer USDC simply because it's regulated in the US. Having a third option like usdt could open up even more doors for crypto adoption. Finally, this makes me wonder if Tether will also list usdt on centralized exchanges. If so, this could boost their volume and legitimacy overnight. And number 5, the market. So overall, the market is down slightly today. Bitcoin is hovering around $49,000, and Ethereum is holding steady at $3,700. Most altcoins are red across the board with the exception of a few. Interesting to see that DeFi TVL has actually dipped by 1.65% in the last 24 hours. This is probably due to people moving their funds into safer stablecoins after the recent exploit on Curve Finance. The good news is that NFT trading volumes have spiked over the last 24 hours. Looks like someone bought a lot of Mila and CryptoPunks. Overall, it's a pretty boring day in crypto, nothing too crazy. And that's okay because the market needs a breather before making a final push towards the end of the year. Now here's what I'm looking at. 2 things to watch out for in the coming days. First, there's going to be a large token unlock on Arbitrum on August. Around 200 million tokens will enter circulation, which is equal to 1.25% of the total supply. Whenever you see unlocks like this, it can put downward pressure on the price, especially if there's not much liquidity to absorb the sell pressure. Second, we have important macro data coming up. Tomorrow, we have the U.S. jobs report, which is expected to show that the unemployment rate has ticked up to 3.7%. Meanwhile, the Bank of England and the Bank of Japan are set to announce their latest monetary policy decisions. These announcements could swing market sentiment and lead to some volatility. So fasten your seatbelts and prepare for takeoff. Just remember, turbulence is normal in investing. Stay focused on your long-term goals and ride out the bumps. And guys, that's all I got. Be blessed. Hopefully I didn't scare you with the whole Fed stuff. Be blessed. My heart goes out to you and your family.